But the bottom line is the investors feel a little more confident about getting back into this marketplace.
You know, we just heard, though, from Sharon Epperson that, and we've heard it from a number of people on our air today, that they're moving into gold, and that there are some that I've talked to that say that that's a worrisome indication. You agree or not?
Well, the worrisome, I own a miner, a Newmont NEM. The problem is with spending this much money and creating this much debt, gold is always going to be seen as a safe harbor. You're going to have tremendous volatility there, guys just pulling money out, trying to get cash to finance any type of market run. But gold looks like a mainstay for people's portfolios. All
right, what are you watching as we go through the rest of this week? What's on your radar?
I'm just glad, and maybe we can get Michelle on. I'm glad that we have a human element on the floor, because now we're starting to see.
Oh, here we go.
We're starting to see the rest of the world is realizing that maybe occasionally during high periods of volatility, you do need a human element. 98% of the volume comes here on the openings and closes, so it's nice to see that intraday people are realizing the value of having a human at the other end.
I'm all in favor of humans. All right.
Be careful, Steve, because the events that happen may prove just the opposite, but we'll see.
How could they prove opposite? A penny print in Accenture, who did that benefit? Pension funds, mutual funds, who did that benefit?
Why did you guys reduce liquidity?
We didn't reduce liquidity, and if you have to educate,
you stopped trading for 90 seconds,
you have to educate you. No, if you knew the average is 1 second for a price discovery in an LRP.
That's a lot of trades in 90 seconds.
High frequency guys cancel their orders. The New York Stock Exchange, we're always here defending the buy side. That's what they do. That's what we do. A machine can't stand up to a price.
Right?
A machine, no, it was 1 second is the average. A machine can't stand up to a bid. It cancels when it sees an onslaught. Humans react. That's why we're here, and the world sees it.
Who gets to the humans? The big guys, right? When somebody needs a big order, they can do it. But the guy behind at the screen at home, he can't get to you guys.
Let me ask you a question. A retail investor, how many of those people are invested in high-frequency funds? Do they get it? The only way they're getting disadvantaged is the high-frequency funds are disadvantaged to the retail. We're down here fighting for the retail investor every day.
That's a lot of your revenue down there, NYSC. Be careful. Those guys spend a lot of money. High-frequency guys are a lot of your revenue, Steve.
Our revenue. Our revenue is the listed companies. Our revenue is the listed companies right now. We defend the listed companies and the investor. Who do the 18 market makers with no unanimity defend? Who do they defend? Right now, we have point of sale. The rest of the market doesn't have it.
I'm all in favor. I am going on the record. I am all in favor of
I love you. I love you despite not having common sense on this issue. I love you.
I am all in favor of the human element, okay? I'm on record.
Thank you.
All right, Stevie, thank you.
Dennis. Buggy whips in the age of rocket ships, Dennis. That's what we're talking about.
Okay.